Hello traders and investors, welcome back to the Trend Trader channel. We know that it's been a while since we looked at different charts. A lot of things have been happening locally and offshore. We know that in the US, they reported a 9.1% jump in terms of inflation. So that is bad news for the US citizens, but also here in South Africa, our inflation rate is also high. Some economists are forecasting that the US can experience a recession sometime this year. Whatever this means to you as investors, the reality to the men on the street is that we've got different challenges. Here in South Africa, the cost of fuel has risen by a lot, and other consumer goods that we buy, like cooking oil. So despite these challenges, the market is still doing its own thing, but we can still find some trading opportunities in that difficult market and the difficult economy that we are currently facing. So whatever you do at all times, always manage risk. Whenever you find trading opportunities in the long side, try to minimize the position that you are taking in order to ensure that you don't expose yourself too much while this market is still difficult. So just to start, we're going to start by looking at the JSE Top40 index. We saw that in the past weeks, the market has been trying to test this 58,000 point level here. We saw that there was a time where it broke below this level, but it quickly bounced. But that was somewhere around September 2021. Before the market topped somewhere around 70,000. So far, the market since around April 2022, it has been trying to pull back. So now, once again, it is testing this level. This is the fourth week. In the past 4 weeks, it tried to test this level. So now it's back at this level. Ideally, the best case scenario is that the JSE Top40 finds support here, and then it continues to trade higher. That is good for all of us traders and investors, because at the end of the day, nobody wants to lose money from the market. But the other scenario is that the market can break below this level, and then it can start to trade lower, especially if some of the companies in the top 40 index are trading lower or they are weak. So at this moment, we are waiting to see how this is going to pan out. Remember that the JSE Top 40 it also affects something like all the index tracking ETFs. One of the index tracking ETFs that I follow is the Satrix Top 40. As you can see that it also keeps on going up and down. So as an investor or as a trader, you will make a best decision for yourself on whether to continue to buy these Satrix Top 40 or Top 40 tracking ETFs while the market is going lower, or you will wait until the market bottoms and then it shows signs of recovery. Because if you buy, let's say, for example, you're buying at the current share price of about 60 Rand, if the value of the ETF drops, it means that now on your portfolio, the position is going to start to turn red, and it's possible that if it drops, it can drop and come here to that 52 Rand level. So at all times, practice patience. Try to wait and see where the market is going. But that 52 Rand level there is it's a possible support level in case the market break below that current price of about 59 Rand 67 cent there. So if you see the Satrix Top 40 trades below 59 Rand, then we can expect it to go and retest that 52 Rand per ETF region there. So like once again, try to make sure that you practice all the risk management. One company that we've been paying attention to for a very long time, we've had positions within the energy sector. We've released a couple of videos where we're buying companies both in South Africa and offshore. So we mentioned that the energy sector was in the bull market. Let's just firstly quickly put a chart of Brent crude, because one of the rationale for buying these energy companies is because crude oil was on a nice uptrend. We saw that once it reached that 125 region or so, it started to pull back. Then it came back to retest this level, which at the moment it acted as a resistance level. We see now that crude oil or Brent crude, it came back to retest that what was previously a support level. So there are so many things that can happen here. The Brent crude can find support here depending on how OPEC and the economy works and all the other factors that affect these things. Otherwise, we can start to see the price of Brent crude falling below $100 per barrel of oil. Right, remember I mentioned that fuel is expensive at the moment, so the best case scenario for us as consumers is for the price of oil to fall back to about $70 per barrel, because that will put less pressure on the price of oil. Then maybe we can expect the government to start considering the price of oil, and then maybe that will be reflected on the price that we pay for a liter of fuel in that there. But as investors, I know that it means that you will have to sacrifice a bit of your profits in order to ensure that your cars still have those full tanks. So now that we see that oil is becoming weaker and weaker, as you see that here what we had a couple of strong red candles for the past for the past 5 weeks. We saw that the oil market has been weakening. So now we need to see where in future where we could possibly go. As you can see, the current price is about $100.80 there. Then this also has an effect on Sasol. We know that Sasol has had a great run, but remember, a great run is not always going to happen forever. You just need to be there while that great run is happening. At some point, we're expecting that once Sasol break above this level, it might go and retest that 450 rand per share level, but it only turned back somewhere around 420. We got a position here around 402, but we quickly stopped on that position. So we exited. At this moment, we do not have Sasol shares in our portfolio. So this is the level of interest that we are looking at. Remember, this was the previous breakout level. We see that Sasol is back at this level. So best case scenario is for Sasol to find support here and then continue to push further up. But if Sasol does not find support here, then we can expect Sasol to continue to trade lower. And each time Sasol trades lower, if you have a position of Sasol in your portfolio, then you can expect that position to keep on turning red with each move down. So here we can see that somewhere around 280, there is a bit of support level that you can expect there. Hopefully that 280 level it holds, but if that fails, we can see that there's another level somewhere around 240. We do not encourage, let us not say that we do not encourage people because we don't have a position. We wouldn't want to have a position. The share price at the moment is at 326 rand per share. So we're not going to sit. If we had a position, we're not going to sit to wait and see if Sasol goes to 280 and then if Sasol goes to 240. We are not predicting the future where Sasol is going to go. We are simply saying that if Sasol trades below 324, then it is most likely that it is going to 280. And if you have a position and that position is on a loss, that loss is going to widen. And if Sasol fails to find support around 280, 285, it is possible that Sasol can fall and go all the way to about 240 rand per share. So if you already have a position and that position is red, meaning that it's a losing position, that loss can potentially widen. Other people, whenever the share price is falling, they see it as an opportunity to accumulate more shares. So depending on where the share price it goes to, the share price can fall and quickly recover, but the share price can continue falling like we saw in the past. Sasol traded around 20 rand per share. Well, we don't expect that extreme to come back, but even then the people that were holding shares, they were not expecting Sasol to fall all the way to about 20 rand per share. So whatever you do practice caution. We don't have position in the energy sector. One of the companies that we've been covering in the past, some of our viewers and subscribers have requested that we cover, it was Sibanye-Stillwater, and we saw that Sibanye-Stillwater in the last week it has been weakening. Previously we said that if Sibanye fails to find position around that 45 rand region, it can also fall to somewhere around 32 rand 50 region or so. So we're waiting to see. At this moment is currently at this support level, depending on whether this is a decent support level, and also depending on the price of platinum, we can also expect to see Sibanye pushing down to about 30 rand 32 rand 50 there, which is just going to be the short-term support level. But remember, the last support level is around 16 rand per share. Again, we are not predicting that the share price is going to fall. We are simply saying that if you already have a position, just expect that that loss can continue to widen, especially if the price of platinum continue to weaken. And this is not only on Sibanye-Stillwater. We saw the similar thing with Impala Platinum, We saw Impala Platinum last week, it fell. They have a similar chart. We also saw this with Anglo-American Platinum, which was also weak last week. So as you can see, it's a similar pattern that we see within the platinum sector. I think the other company is Northern Platinum. We also published, if you're on Twitter, we published this using TradingView. We mentioned that Northern Platinum was around this support level, and then once it break below this level, then we can expect the share price to continue to go lower. We also mentioned in that post that we don't have a position within the platinum sector. So if there's nothing to buy, we also try to reduce what we are holding, especially if we are holding something that is falling. But one thing that you need to keep in mind, every time you close a position, you trigger a tax event, then you are expected to pay a capital gain tax if you made a position if you made a profit in that position. So whenever we are reducing our risk, we are always triggering a tax event. So that is something that you need to keep in mind. Once again, we don't have positions within the energy sector and the platinum sector. So as you can see, there are a lot of negative things that are happening, but there are other setups that we've been buying lately. We're looking at the US biotech sector. As you can see from this SPDR ETF that tracks the biotech, what you saw here is that the biotech was weakening. It continued down, then it started to trade sideways, consolidating before it pulled a bit up higher here. As you can see, we plotted this resistance level, which was broken about 2 weeks ago, and then the share price of this ETF is still above this $70 level here. What you're expecting at the moment, we would like to see the price of the ETF break above this level, which is about $85 per ETF. And then if it does that, then we can expect the ETF to continue to go down. Previously, we mentioned that if we see something like an ETF, we like to go and see the underlying companies there and try to find bullish setups as well in those individual companies, because the ETF, it carries both some companies that are performing well, but it also have companies that are not performing well. So an individual company is more likely to outperform the ETF, but also the ETF, it does give us exposure to other companies. Let's say, for example, there are 5 best performing stocks within this ETF. It wouldn't make sense for us to buy all those 5 companies. We might buy maybe the top 2 or the top 3 and then supplement our position with the ETF. But just that is something that you can keep in mind. So what is within this ETF? It's a plenty of companies. You can find more information if you just go to the SPDR website there. But one company that you've been paying attention to is Merck Company, which is well, it's a pharmaceutical company, but it is also involved in chemicals and consumables, different things there. So depending on the time frame that you are looking at this chart, you can see here we're expecting before this candle formed, we're just looking at this resistance level. So we had the buy stop order once the share price broke above this level, and our trade was triggered last week just before Friday close, and then our stop loss is just a multiple ATR below the low of that Friday position. So we do have a position here on Merck Company. We would like to see this company continue to push further up, but do keep in mind that the general market itself is still weak, so we're not too hopeful on this. What do we mean by the general market? If you look at the S&P 500, which is the SPX, you can see that the market is still on a downtrend at this moment. The market is still going down. So basically, we are trying to work uphill. Everything is easier when the market is just going up. Everyone thinks that they are geniuses, because everything that you buy, it can easily become profitable. But when the market is on a downtrend, then it is not that easy. And then adding to that indices, we're also looking at the NASDAQ composite, because it is also trying to recover. Well, it is not trying to recover, at least for now, because it was on a downward momentum. Then it has started to consolidate here. So what we'd like to see, we want to see NASDAQ maybe breaking above that 12,000 point here. Then we can expect NASDAQ to continue to trade higher. We are not predicting that NASDAQ is going to go high. If it goes high, we might start buying some ETFs. If it doesn't, if it breaks below, then we continue to sit on cash. But in order for us to be able to track this NASDAQ composite, we will be looking at the QQQ ETF, which is just an ETF that tracks the NASDAQ, the investor. a triple Q trust ETF. As you can see here on the ETF, we've already plotted here this bottom to see that, okay, as long as this ETF stays above this level, and then like we said that if NASDAQ breaks above that 1200 or 12,000 point position, we're going to start buying. Same thing here. If we see that NASDAQ tries to stay above this level, maybe it breaks above this level with a bit of retest, then we'll be encouraged to start buying this ETF. We don't have this ETF at the moment in our portfolio, but it is something that we'll consider adding depending on how this ETF performs. Again, going back to individual companies, we're looking at some Chinese companies. At some point, this Chinese ETF, the Satrix MSCI China ETF, it was promising, but that was before the CPC announced that they will be clamping down on those Alibaba companies. Every other country has its own political situations, whether it's South Africa, China, or US. So we cannot say that the China stocks are more risky than the US market. But we bought this ETF around 40 Rand per share. We saw it pushing all the way to about 45 Rand per share before it crashed last week. It is back to our entry level. Our stop loss, which is just here, hasn't been triggered. We still have this position. So we're expecting this position to continue to push further up. But that was before that announcement that came from the Chinese government that they will be dealing with these companies. So this ended up affecting some of our other positions that we have, or that we had positions in some Chinese internet stocks like PDD, which is listed in the NASDAQ. As you can see here, also this stock broke above this level. It attempted to trade higher. Now it triggered our stop last week, so we exited this position with a loss. At this moment, we want to see whether this stock or this, yes, it's a stock, it's not an ETF, if it's going to try and continue to push further up. We are just sitting on the sidelines watching this position very carefully. One of the position that quickly turned sour, we had a position on Alibaba. Same thing, Alibaba, as it was trying to push further up, when that authorities news came in, then it came back and then it triggered our stop loss. So we have since exited these positions. We don't have this position at the moment. There's Chinese internet stocks, so we're just sitting on the sidelines waiting to see what is happening. I think we also had another Chinese company that is listed in the US. Once again, similar pattern. It tried to push further up before it came back, but we still have this foot holding position in our portfolio. We've only exited PDD and Alibaba, so we're waiting to see if this is going to find support here and then continue to push further up. All stocks are risky. It doesn't matter whether you're invested in South Africa, China, US. If something happens, companies are going to be affected. There's nothing that we can do. It's the same thing with the government bonds. As much as the government bonds on paper, they look like they are less risky, the risk is always going to be there. The government can default. Different governments, not just the current South African government, has the potential to default. Even the past governments have defaulted on some of these things. Okay, so now when we look at one company that we will be adding onto our portfolio this coming week, we've got this company Roblox. Some people, they know what this company does. To us, it is irrelevant what this company is doing, because what matters is that we'll be monitoring this position using technical analysis. As you can see, Roblox has been on a downtrend. It did try to consolidate in other times before it failed. Once again, it also consolidated, traded sideways, and then now it is trying to recover. What we see here, we see a series of higher highs and higher lows, meaning that this is the higher high, this is the higher high, and these are the higher lows. And also, if you look at the volatility of this stock, it is starting to contract. You look at the ATR, it is trading, it is less volatile compared to this period where it was falling with large candles, where it was more volatile. So this is encouraging that, okay, we can take a low risk, a long setup. By low risk, we mean that we are going to have a tight stop loss. We're not implying that we we are getting a risk-free position. There's nothing as a risk-free position. All positions, they carry risk, even though we see this large candle here which went up, but here we can see we've got a nice trend line there. So we have a buy stop order above this level, and then we're going to set our stop loss just below this recent low, so that if the price of Roblox it comes back here, our stop loss is triggered. So this is the amount of risk that we are willing to take in this position. For us, there's no such thing as long-term or short-term investment. We just want to hold the position as long as the stock trades above our entry level and it does not trigger our stop loss. So we know that every position that we take, it has a risk, a certain element of risk, and for the short term we can expect the share price of Roblox to come and reach that $50 region or so. So if you look at this, the size of this gap from that proposed entry level with the risk that we're willing to take, that's about 1:2 risk to reward. Every time we take a trade, we want to ensure that the potential reward is bigger than the amount of risk that we are taking. Like we are saying, it's a potential reward because the future is uncertain. We can't say for sure that Roblox is going to go higher, and the risk is certain because if the share price does go down and we exit that position, we are guaranteed that we'll exit that position with a loss. So that's the reality of trading the stock market. The risk is always going to be there. You just want to ensure that you reduce and minimize that. You reduce and manage your risk there. It is important to minimize the risk. Remember, we said that your portfolio represents 100% of your capital, and if you take a 2% risk per position, it means that you have 50 chances to make money in the stock market. If you cannot make money with 50 chances, then I guess you shouldn't be in the market, or your strategy, whatever approach you are using, is not going to make you money in the long run. So it is important that you quantify the potential risk and the potential reward, and also at the same time you need to know the size of your wins, the average size of your wins and the average sizes of your losses, and also have an idea what is your win rate. Your win rate is not as important. What is important is that average wins compared to the average losses. If you don't know how you calculate that, we will link a video where we showed how much money we generated from the stock market in 2021. We showed those calculations on how we calculated that, because it is important that whenever you're trading the stock market, you are trading it with a strategy that has an edge. An edge is just a higher probability of you making money rather than losing money. And then the other stock that you are looking at this moment, we're not expecting anything big, but it's another setup that you can trade in the short term. We can see this is Apple. It's one of the most profitable companies, not the number one profitable company in the world, but it is profitable as well. So we see that Apple is also giving us higher lows and higher highs. So this is promising. We have a buy stop order somewhere around $151, and we have a stop loss around 140. So we have a $10 risk on this position, and our short-term target is somewhere around 180. You can see the risk to reward is just slightly greater than 1:3. So if the share price of Apple, no matter how long it takes, it can push all the way to about 180, then we can expect to make 3 times the risk that we are losing, or the risk that we are taking there. That's the only thing that is important. We are not buying Apple because they produce nice product, or because they have a moat or great management. All those fundamental things don't really matter that much to us. What is important is that based on technical analysis, we can see that the potential risk to reward is favorable. And one thing that you need to pay attention, we see that the earnings are coming somewhere just before August. So whenever the earnings are coming, depending on whether they beat, you can see the past earnings. So the Apple was able to beat the estimate, but we don't really like how the US does things, because an estimate is just a guess. You cannot say someone beat a guess, but just keep in mind that in the next coming weeks, the earnings report is coming. Another thing that we like with Apple is that volatility is now less compared to this period. We prefer to buy stuff when the volatility is really that low. In future, we'll be making more and more videos on how to use a trading view and also on how to use different indicators to make decision. So if you haven't subscribed to the YouTube channel, make sure that you subscribe so that you don't miss all those tutorials, because we will be going deeper into how we do analyze the stock market using just a technical analysis and then combining price action alone and also adding the indicators on how we can use the indicators to make decisions, right? So we still expect Apple's at least to be profitable, not necessarily to beat the estimate. As you can see, all the earnings are usually followed by dividends. So if you already have a position and the earnings are good, they are green, meaning that Apple did beat the estimate. And if they do declare dividend, if the position itself, number one, is profitable, we can also expect to make a bit of money from the dividend. But our number one priority is capital appreciation, not dividend. We will never buy a company just because the company has the potential to pay a dividend. We buy a company because it gives us a setup that gives us a low risk and a high potential reward. So that's it that I wanted to share with you today. We'll be covering more and more US companies. As you can see, whenever you're listening to news, you can see that some of the South African companies are on the verge of being acquired. We had a position here on Mediclinic. We bought Mediclinic somewhere around 85 rand. Actually, we wanted to buy Mediclinic around 80 rand when it broke above this level, but we did miss that breakout, and then we bought when it came back. It broke above this level, and then last week Monday we learned that Remgro, which is the holding company of Mediclinic. Remember, Remgro is also listed in the JSE and Mediclinic is listed, but now Remgro wants to buy all the shares from the existing shareholders and then take Mediclinic private. So it always happens that some of the JSE companies are being bought out from the public shareholders, and then they want to privately hold these companies, meaning that once the public shareholders sell their shares to Remgro, then this company has a potential to delist. So that what is going to happen, the JSE is going to have less and less shares for us to trade. So that is why we are increasing our exposure in the US. Now we want to trade more and more the US market rather than the JSE, but there are still opportunities within the JSE. Like we said, we have this position on Mediclinic. The offer, it's about 5.02 British pounds, which is at last week's Monday trading exchange rate. That was about 102. So from the current share price of about 96 rand, we might expect the share price of Mediclinic to push all the way to that 102, and then it can get stalled there, but that is not guaranteed. The share price can still fall, especially if the existing shareholders decline the offer from Remgro. When they made that offer, the share price was just below this level. It was below 90 rand per share, so it pushed a bit further up. So we would like to see that, well, as an existing shareholder, because I have a position, I would like to see the share price to push all the way up to about that 102. Once 102 or 100 rand is reached, then I will sell my shares, because I've seen in the past, whenever a company does receive an offer to buy out, once the share price reach the offer price, then the share price it stop going up. We saw it with Imperial Holdings. The deal is still in talks there, not Impala. We want Imperial Holdings or Imperial Logistics. Let's see if we can find it. Okay, I don't know why we're not finding it on, because the share code is IPL, but we saw it with Distel as well. Distel has been offered at a share price of about 170 something. At that time, we had the position from Distel, which pushed all the way up to that offer price before the share price it crashed. So the thing about this trade, also Distel is owned by Remgro. We saw that there was a nice push all the way up, and then the offer price was somewhere around 173. As you can see, the share price has been stuck around 170 rands range. So you see, for the whole of 2021 the share price hasn't gone anywhere. I don't like my capital to be tied in this position. That is why once the offer price has been reached, I prefer to just sell my position and keep my cash, because I can always go and find other positions that I can buy with that cash. So like I said, that's all that I wanted to share with you today. If you haven't subscribed to this YouTube channel, please consider subscribing. If you found value in this video, please smash that like button. We will see you in the next video.